Well, welcome everybody. My name is David Hamilton. I'm the chairman and founder of the America's Future Series, and I'm here with my business partner, Michelle Pearson. And I wanted to have her on stage with us a little bit because she's always behind the scenes and doesn't get enough of the limelight. And she is not only the glue that makes all of this stay together, but also I like to say she's the yeast that makes the bread rise. She's the catalyst that drives it, sort of the Energizer Bunny. I don't know any other analogies I can use, but I'll use them all. Anyway, I want to thank you for everything you've done to help organize this event and all the other events, and sing your praises a little bit, because I don't know if everyone knows this. This is the largest event of its kind I think internationally, with this breadth of speakers, level, viewers, investors versus the defense industry, military, et cetera, of its kind in the nation and possibly the world this year. And that is in no small part, no small matter. The reason you are the reason for that.
No, it's an honor to work with you, David. I enjoy it very much. I enjoy working with our speakers, our sponsors, our team. It's wonderful. Yes, a lot of work. It was great. We had our team, Stephen and Max, we had over 900 attendees to watch Scott and Baruch last time. So that's tremendous. And most of all, they're getting the information that they need. And these entrepreneurs, these technology companies, we're advancing technology and bringing the people together that can collaborate. So I think it's worth it, and it's great.
Okay, we'll appreciate that. Appreciate all your hard work. And I want to say also, I want to echo your sentiments about Max and Scott and Christina and Stephen and all of our, and who?
Ken, Bo, Greg,
Ken,
Mitch,
Bo, and Z and Lieutenant Harry Radigi. So please go out to our America's Future Series website and please check out our team. I think you'll be really impressed with the people on our board of advisors, and also all of the folks that help organize these events on our executive steering committee, et cetera. And we are looking for people who are silly and crazy enough to join us, right? We're looking for other people to engage in this. So we're looking for more people to host events, moderate, be on panels, all that sort of stuff. And if you like a little bit of hard work and you find it rewarding to help, as we like to say, not only move the needle, but break the needle off in the backsides of our near peers in terms of innovation and putting capabilities into the hands of our warfighters, then we welcome you. We'd love you to be part of this. So with that in mind, we're going to bring up some folks that are going to have a lot to say about that particular subject, and in particular, the funding, venture capital, et cetera. So I'd like to bring on our good and dear friend, Heather Richman of BMNT, and I'm going to read a little bio on her, make her blush, if that's all right, Heather, while you're coming on. No, Heather, as an entrepreneur of the residence, as entrepreneur in residence at BMNT, Heather works alongside the U.S. Department of Defense and intelligence community to create ecosystems of innovators and investors to engage in national security focused problem solving on all levels. Based in Palo Alto, California, she is the founder of the Defense Innovation Network, which fuses the private capital investment ecosystem and the national security enterprise to promote agile innovation and transition while reducing the threat of foreign direct investment. Previously, Heather spent time on Capitol Hill, where she led appropriations, budget, and tax for U.S. Senate Majority Leader Chuck Schumer, handled government relations for Stanford University, and was part of the founding team of Elemental Accelerator, the $36 million Navy initiative that has leveraged $2 billion in private capital and paved the way for energy innovation in the military. BMT provides a platform where innovators can work together at the intersection of business, government, academia, and society. Their platform brings to bear deep, mutually supporting networks of innovators, researchers, defense, and national security officials to identify and solve complex problems for military, intelligence community, and defense innovation-based clients. So that is a lot of work. And I got to tell you, I know Heather personally. She's amazing. She's amazing to everyone, and she knows everyone. So if you want to get connected, the Uber connector on the planet in this world is Heather Richman. So Heather, welcome.
Wow, thank you. Yes, I am blushing. You can't see it because I'm thank you. And Michelle, thank you. And Bo out there, thank you guys so much for having it. This is a topic so near and dear to my heart. One correction I do want to make, it's actually the Defense Investor Network, because there is a Defense Innovation Network, and I don't want to steal their thunder. So
gotcha. It's a different group.
We're two different things, and it's very confusing, but it's
arose by any other name. Anyway, well, welcome. We're going to let you run this.
Thank
I
you.
just want to say thank you, and we'll let you take over because we know that you'll do a magnificent job, and we want to thank you.
Thank you so much. And I see some other folks, Sean, on here too. Feel free to jump in. We are a friendly bunch, and usually. But I've got some friends here that I want to introduce. I'm gonna let them introduce themselves, but I'm really excited to have some folks. We at the Defense Investor Network have some spirited debates sometimes and share a lot of good information. So whether you're coming at this from the DoD and IC side, or from the investor side, or from the company side, I hope that we'll spend the next hour, and I think I've got hour and 15, but cut me off short if you need me to. But I'm hoping that you actually leave with some tactical information, some real information that you can use to move either your fund forward, your company forward, or your service forward. So again, this is my favorite thing. I'm so excited. So I'm going to, I guess, go in alphabetical order. We've got 3 different investors from very different kind of sections of defense investing, and I'm really excited that they're all here to join us. But Alex, I'm going to have you go first, and yeah, hit it.
Thanks for having me on, Heather. I can attest to the previous statement that Heather is a super connector and probably one of the best people I've met in the defense ecosystem. So very proud to be here. I run a defense-focused venture capital firm called J2 Ventures. We are in our 2nd fund, and I kind of started it. Most of my background is in either tactical work for the DoD. I was formerly an intelligence officer for the Army, and then worked on various funding initiatives through the Defense Innovation Unit, where I still serve as a reservist.
Awesome, Alex. Thank you so much. Eileen, thanks for being here.
Oh, of course. And yes, Heather is a master connector, and I'm very happy to be here. So my name is Eileen. I have been in a startup, venture capital, and then recently, or not recently, I guess, 4 years ago, joined In-Q-Tel. In-Q-Tel has been around for 20 years. We make investments on behalf of the intelligence community in everything from enterprise software to sensors, semiconductors, that sort of thing. And, I really am quite passionate about this topic about us as a nation ensuring, effectively that we continue to lead the world in innovation, and so happy to be here.
Awesome. Thank you so much. And Trae.
Yeah, hi, my name is Trae. I am a partner at Founders Fund, which is a venture capital firm based out here in San Francisco, started by the PayPal Mafia. So the early team there, including Peter, Max, Elon, so on and so forth. At the beginning of my career, I was actually working in the intelligence community, so the mission set here is very near and dear to my heart. Ended up leaving my government job to go and work at a startup, a very small startup at the time called Palantir, where I was one of the first employees. I ran kind of sales ostensibly there for about 6 years, and then joined Founders Fund in January of 2014. And then probably the only other relevant thing to mention here is that about 3 years into my time at Founders Fund, after looking for a defense startup worth dumping and concentrating capital in, I ended up getting jaded and decided to start one of my own. And so I'm a co-founder of Anduril Industries, which is a kind of next generation defense prime that I started with Palmer Luckey, who is the inventor of Oculus, and Ryan Schimpf, who ran engineering at Palantir as well.
So thank you guys again. And I also encourage you guys, don't wait for me to ask questions, feel free to ask, each other questions, and feel free to answer the question you wish I'd asked you, because that's my favorite ploy. But quickly, so Trae, I'll start just because you mentioned next generation defense prime. We hear that term a little bit. What do you mean when you say that?
Yeah, I think there's like different categories of types of companies that you might intersect with in this space. There's like, very specific product companies that, it's like a company that is really good at building, blah, inner whatever you want in there. It could be like night vision goggles or something like that, where it's a single product and the company is built around selling that single product. That's not what we're doing. It's also not dual use. This term gets thrown around a lot, which is like, we're going to have a bunch of commercial customers, and it just so happens that we're also going to be open to selling to the DoD. That's also not what we're talking about. We are a defense first company. And if there are commercial applications of that technology, great, maybe we sell to them as well. But we're building to the requirements of the military and the national security apparatus. So I think that's like kind of the key. It's worth keeping in mind that like the defense prime space is dominated by players that have been around for decades and decades and decades and have been consolidated in a number of different ways without historically really being disrupted. And so at Founders Fund, we're the largest institutional investor in Palantir, SpaceX, and Anduril. And in all of those cases, other than Anduril so far, getting access to these big program offices that are traditionally owned by the primes requires literal lawsuits. That's how sticky the industry is. And so what we're trying to do is say, if you were to build Lockheed Martin from the ground up today in 2021, what would it look like?
Got it. So Lockheed Martin, they have a great venture arm, great folks over there, and they are, kind of looking for new capabilities. Are you at Anduril looking for new capabilities to interact with up and coming companies, or you got this?
Yeah, to be fair, like hardware is hard, and we're not going to do all of the things that everyone else does. So, for example, one of our top products right now is called a Sentry Tower. It's basically an autonomous computer-driven vision ISR capability, and we're using a Echodyne metamaterials radar. We're using someone else's camera. We're using someone else's thermal camera. We're using someone else's solar panels. And so absolutely, yeah, there's tons of room for partnership. The goal, of course, would be rather than like the traditional prime model where we're doing a cost plus contract and getting 7 to 12% margin, and we're kind of holding our subs over the barrel on trying to like squeeze out every ounce of juice. Our idea is that we're doing this as a product, not as a cost plus contract. And that gives us the ability to work with other companies in a way that's actually accretive to everyone around the table.
Got it. Thank you. So you mentioned a couple of terms, Eileen, I'll come to you. We've got dual use, defense tech, defense first. What do these terms mean as companies are kind of putting themselves in a bucket or not?
Yeah, so Trae really, I think, mentioned it. So in our case, we are actually investing in only dual use companies, and that's because the check sizes at In-Q-Tel are relatively small. So our average check size is anywhere from $500,000 to $3 million. And as many of you know, that's not very much when you're trying to build out a company that's going to disrupt an entire industry. So how do we do that? Because we look at a company's existing product, we see, hey, all right, they're going after an enterprise customer, they're going after automotive, they're going after industry, pharmaceutical, life science. And with this product, they can disrupt that market. And it turns out that term dual use, right, of course, is that apart from being relevant in those very large industries, their product can be slightly modified for, in our case, the intelligence community. So the dual use aspect of one use for their target customer, another use for the intelligence community. And I should add, which I did in the beginning, right, when we say intelligence community, it isn't just the CIA, right? It's the CIA, NSA, NRO, NGA, and then we, of course, also service CBP. So it is, In-Q-Tel has grown. I mean, I think most people know us as effectively the CIA's venture capital arm. It's not really an accurate term, but let's just call it for that for now. But we have grown to really represent 9 other agencies, and they have lots of requirements. And a lot of the times those requirements intersect, with that of the general larger industries that I mentioned.
You said one thing, slightly modified. Whenever you say slightly modified, people with IP get very nervous. How have you guys kind of approached the IP question from companies, or do you still get that question?
So I think when we actually do work programs, what we try to ensure is that effectively no IP is created in the work program itself. Because indeed, if In-Q-Tel, when we invest in you, if IP is created, then you're going to jointly own it with In-Q-Tel. So when we say modify, I mean, that can be anything from, all right, use a different processor, or so just on the hardware side, the systems approach, use a different processor with a lower swap, or, you're making a software as a service, we need an on-prem version. So we need you to make an on-prem version. It may be, so things really, and in some cases, 90% of the time, let's say you're a chip company, just delivers the chip with training, but the training is going to be in a specific, for a specific group that is a totally different data set that you're not used to, but nothing is changing on your fundamental product. It's just that you're using it in a different context. So, so yeah, to address the IP issue, it really hasn't come up. And if we do see that, look, there's going to be IP created here, we're probably not the right place, because that's going to take a lot more money. And there are other pockets that perhaps one could go to, like DARPA or somewhere else, or go raise money from a big venture capital fund and get your IP finished and then come to us. So that's what I would say about that.
And you did mention then kind of requirements or what you guys are looking for. How do companies find out what those requirements are, or what you guys are looking for?
Yeah, so I mean, this has been 20 years of trying to perfect this model, right? So every year we, as In-Q-Tel, we're about 90% of us are cleared. Sorry, there's a little doggy here who wants attention. So 90% of us are cleared. We go into the buildings. We are briefed on the priorities for each of the agencies that we service, from a high, medium, and low kind of ranking. And then we as a team go out. So we make these architectures to effectively address the problems that we were given. And then we go out and look for companies who, any one company on its own is not going to be able to solve the whole problem, but those companies put together can. So we sort of look at our own architectures, and then we look at the spaces in between and invest with that in mind. So it's a little bit different than perhaps how other financial VCs do it, because we understand the context under which these products are going to be used. So yeah, I mean, the answer is, I think it's implied in there, you need to work with us because we have the whole picture and we are the ones who have the clearance to understand the context.
Understood. Got it. Alex, so the term defense first has been brought up, and I know that kind of from where you come from, how, as you're looking for investments and looking at companies, are you looking, or is defense first okay? Looking at dual use, but kind of how are you evaluating that?
Yeah, it's exciting to be on this call with Eileen and Trae, because I think the actual impetus behind this was we had another kind of closed door meeting where there was some debate about this focus, and Trae had brought up the product piece, and I think Eileen talked about the focus of In-Q-Tel very, very well. And we all have kind of different incentives in this market. Defense first can be helpful at an early stage, and it's really tough at a later stage. And I think that's why the mix of investors that we have on this call is very interesting. I think both Eileen and Trae are incredibly talented, and if I may speak, and feel free to rebut what I'm saying here, but Trae can lead investment rounds in big companies that are going to disrupt Lockheed Martin, because he has the financial backing to be able to do so. I think the observation that has been made is that most of these truly disruptive defense first near prime companies were backed by billionaires, right? So there was somebody who was able to kind of take somebody away from the edge and finance those companies when they were close to what would otherwise be a very difficult circumstance if they didn't have a Trae Stevens Founders Fund, Peter Thiel kind of PayPal mafia in their background. Similarly, Eileen is looking for companies that I think are very talented on the commercial side, but could have a lot of applications on the defense side. And In-Q-Tel's focus is to be sticking around and making sure that they remain relevant as those companies scale. And Eileen, correct me if I'm wrong, I've co-invested with In-Q-Tel before, and that's usually the background that I get. And so I think in that sense, when you think about whether defense first is good, I would say, look, if Trae Stevens or somebody is interested on the other end that can be very financially relevant as your company scales, then defense first is great. But if not, and you're just looking to kind of scale more organically, then it is a much more nefarious position to put your company in. That doesn't mean you shouldn't do it. It just means that the execution risk is much higher. I've invested in defense first companies, and I've invested in much more dual use focused companies. And I can just tell you, the pathway is much easier if you are more dual use focused. And that is not an indictment of being able to sell to the Department of Defense. It just means that you have to know that it's going to be very hard, albeit hockey stick growth once you hit there, because last I checked, Palantir was not a small company anymore.
No, that's great insight. And I mean, it just for any of you, for all of you, I mean, we all live in this every day. And so I think I might be a little off on my take, but just what kind of tipping point have you seen in the last, I don't know, 5-6 years, kind of around I'll say for the Valley here, Alex out in Boston and on the East Coast, just as far as the appetite for investors being willing to, I won't say willing, but interested in having their portfolio companies, work with the Defense Department and really start to look at the defense and the IC as valuable markets. Trae, like what have you? I feel like there's been a bit of a tipping point, but I could be off.
Yeah, I think since Ash Carter was SecDef, we've seen a lot of like stuff start happening. You had the Defense Innovation Unit was stood up. The United States Digital Service started an outcropping in the Pentagon called the Defense Digital Service. The Strategic Capabilities Office was stood up under Ash Carter with Will Roper at the helm. You had SoftWorks, AFWorks. We went from like dozens of innovation orgs across the Pentagon to like literally hundreds. I think that the spending at the kind of like pilot and prototype level is at an all-time high. Like it's never been easier to win pilots and prototypes with the Department of Defense. And I think that is both a net positive and also like a potential negative at some arbitrary point in the future from an investment perspective, because right now investors don't actually know the difference between pilot and production. They just see like money coming in as money coming in. And they're giving these companies credit for like deployments of their technology when there are no deployments of technology. And the piper is going to require payment at some point in the near future. And if nothing transitions into production, we're going to be back in a place where, the traditional investment community will no longer be interested in supporting this community. And it's not for lack of patriotism. This is like the narrative that I think the DoD wants you to believe around trusted capital and stuff. They're like,
we'll get there. Hold that thought.
Investors aren't patriotic enough. No, investors are plenty patriotic. The problem is that the DoD doesn't actually buy things from startups. That's the real problem. And so if you can't make money and you have a fiduciary responsibility to your LPs, this is a pretty terrible place to park capital. And so I think that's the problem that we need to get past. And I think we have to do this, like, no joke, we have to do this in the next 3 to 5 years, or we're going to be in a worse place than we were before all of the innovation attention was turned.
So, right. So I just kind of envision then like rifle shooting transition, like how do we make that better? Like, how do we, we'll get to the trusted capital conversation in a minute, but how do we kind of build that ecosystem of those trusted investors and those companies that are understanding requirements and getting the right kind of direction and getting the information that they need? Because I do feel like it's a lot of shooting fish in a barrel still.
And I want to push back on one point, because I think at the scale that Trae is talking about, what he's saying definitely makes sense on the transition to production, but it kind of depends on how you define product market fit or what your exit looks like. At a small enough fund size, you can actually take the traction that you get from a phase 2 SBIR. And if that results in an acquisition by a prime, depending on what your multiple is on invested capital, that can still be a meaningful exit. Not for a multi-billion-dollar fund, it's much harder, right? You need to create a General Atomics, you need to create an Anduril Palantir kind of outcome. But if your intent is to just get 10x your money, then there is the possibility of being able to rationalize that, assuming that the acquisition focus, and I mean acquisition from the defense side, or excuse me, from the prime side, not the defense side, maintains the pace that we hope it will. Or if you're just going to kind of create bolt-ons to other private equity firms, there is meaningful exit from there. It's just difficult, I think, if you're going to get this this large and kind of long-term VC focus, like Trae had mentioned, then you will need to start seeing a lot more production contracts that are going to be more meaningful. And I think I agree that's a level of agility that we haven't achieved yet. It is the world is awash with people with phase 2 SBIRs or phase 1 SBIRs. And the most difficult thing is when somebody tells an unsophisticated defense investor that they have a contract with and insert branch here. And I think as people become wise to this at a more ubiquitous level, that's going to create the fallout later on, which is going to serve as a negative signal. And I think that can be difficult if you don't get the follow-on pieces that Trae was alluding to.
So I'm going to take this from another end. The other way to fix this is to change how venture capital works, which you're starting to see with, the advent of these Tiger Globals, and who knows how that's going to play out. But let's ask fundamentally why this is hard for venture capitalists to invest in. It's hard for them to invest in because they have a 4-year investment period, a 10-year investment life around the venture capital fund. They must return a 30-some% IRR within that time period, or they cannot raise the next fund. That's how venture capital works. So if you cannot get to a substantial exit, substantial revenues, or substantial valuation where you can sell secondary, then you're not going to fit in this model, right? And if you're a defense-focused company, it is very hard to get to that in the time frame that is needed. Let's just remember Tesla's, the first investment in Tesla was in 2006, and no one would invest. DBL was there, but, and then Aaron Price was there, but nobody else wanted to touch it. Fisker, nobody wanted to touch those things. It takes, a visionary like Elon Musk, and then those venture capitalists that are willing, and remember, DBL is a double bottom line fund. That wasn't purely about financial VC return. So look, what's happening right now is because you've got these hedge fund guys who can make money on the public markets and are doing these crossover funds, maybe that's the answer. They can write big checks. They can hold their investments much, much longer. Much like SoftBank. SoftBank, if you ever listen to Masayoshi-san, he has 17-year plans, 16-year plans. It isn't 4 or 5-year plan. That's a very American kind of way of thinking. Why? Because everything gets, moved over 4 years. We go to college for 4 years. Our presidents change in 4 years. So everything is around this. So if the venture capital sort of view of, look, we're going to wait 16 years, 18 years, 20 years changes, then you can have that. If you're still going to fit into you need to get really big in 5-6 years, good luck. Then you better be dual use, because that kind of hockey stick is only going to come not from the defense industry, but from usually some consumer driven thing that then pushes something else to have the hockey stick.
Gotcha. So, Trae, something you mentioned, dozens of innovation organizations have popped up inside. And there's been kind of a cyber heyday. Just from all your perspectives, what sort of signaling, back to kind of the requirements piece and that we were talking about, what sort of signaling, now that AFWorks, with Agility Prime has kind of talked more about, these are the sorts of things we're interested in, kind of put it out there versus giving everyone a cyber. And I know the DIU has put out kind of their list of drone companies that they've kind of, checked off or given their seal of approval to. How does an investor receive this kind of information? Is it helpful? Is there a different, way that folks on the inside should be signaling to external investors? All of the above.
Yeah, I think actually the DIU small drone competition is a really interesting one from a systemic perspective inside of venture capital. So the cycle from first application or first response to proposal to the contract being awarded to the winners was longer than a venture capital fundraising cycle. It was 22 months or something like that. I forget the exact thing, but it was longer than a venture capital funding cycle. And so basically what happened is that the winner out of it was more or less Skydio. You could argue that the others are getting some deals as well, but really Skydio is the winner of that competition. Skydio is 90% consumer. And the only reason they were able to survive is they had a revenue stream keeping them alive, when all of these other players, many of whom I really truly like, I think very highly of their founders, they couldn't raise capital because the government was dragging its feet on articulating whether or not they were going to have any shot at winning this competition. So that's actually a perfect example of things gone wrong. It was, even inside of the DIU high speed version, still too slow. And now these companies literally no longer exist, the ones that were kind of on the fringes of that competition. Go back to what Alex said earlier as well. I can't stress enough this economics thing that Alex just talked about. For some funds, it does make sense to invest in companies that will get acquired at some price in the low hundreds of millions. Below Palantir, SpaceX, and Anduril, I think the next best defense first company from an exit perspective over the last 20 years was Blackbird Tech, which was acquired by Raytheon in 2014 for $450 million. So let's say you were the lead investor on a Series A at a 10x multiple, a $40 million investment, or sorry, a $40 million valuation, which is a very low Series A in 2021, but maybe that was what it was in 2014. Let's say you put $10 million in. and then the company sells for $450 million. Assume, I don't know what you guys think, but maybe like 20 to 40% additional dilution. You basically made, call it maybe $80 million, maybe $80 million. So if you have a venture fund that's $100 million, you didn't quite return your fund, but like, that's probably pretty good. I hope you had other good investments. If you are a founders fund and you have a $1.5 billion fund and you just made $80 million, congratulations, do that 1,000 more times. Like, it just doesn't matter. And I think this is the thing that I have a hard time with. Like, it's really hard to articulate this problem. Like, a $100 million acquisition, life-changing wealth for the founders. No doubt about it, life-changing wealth. This is great. This is good for the ecosystem. For most VCs, even VCs that are $100 million funds, it just doesn't even scratch the surface. Like, making $10 million off something doesn't end up mattering. And so I think that's the place where this becomes incredibly challenging, is that maybe there has to be other financial instruments to get us to the point where we're able to do this. Because right now, like, as Eileen said, like, the venture play on this is like really confusing unless you can get into, you know, much bigger exits.
So what might some of those other, I mean, we've got 3 funds here that look very, very different, right? And that was intentional. But so what sorts of things, I mean, funds like, like Alex's are smaller, and are, coming up and really focused on this. And I mean, Alex, if you'd be willing to talk about kind of how you're, why did you choose this? I know why, but if you tell everyone else kind of, why did you get into this? But then 2, how do you see this then growing?
Real quick, before he gets into that, I do want to hear this answer, but a necessary piece of information. I think Blackbird was founded in like the late 90s. So we're not talking about like a 5-year run to 450. We're talking about like a 15-year run to 450. So on an IRR basis, like, you were actually better off just investing in the stock market. Anyway.
Fair enough. Although I would make that argument, Trae, along a long enough time horizon, even if you worked at a hedge fund, you'd probably be better off investing in the stock market. And regardless of whether it's defense or not, right? I mean, 85% of VCs, I'm making that number up, but I think it's directionally correct, aren't good at their job. Whether it's defense, they don't return better than the S&P 500. So I think it's important also to caveat that while these issues do exist in the defense ecosystem, they're not necessarily idiosyncratic to the defense ecosystem. You can be a consumer VC and still be bad, and still not return your fund and still have these issues. I think to kind of combine the points that I saw from Trae and Eileen, and I mean, I came into this very hesitantly. I was in Iraq, deployed, and that's where I got picked up for the Defense Innovation Unit. My intent, I was a healthcare VC previously, was to go back into healthcare, where multiples are very significant. And I think that, there's a similar kind of acquisition thesis, but it's much larger than you see even in the defense ecosystem. And it's a much easier world. I think it's kind of one that you can understand, but there are a lot of parallels to how they see the world and how I think defense can see the world moving forward. I think in order for VCs to succeed, as Eileen said, you need to change what the VC means and how they function. And I think that begins with communication to limited partners. So you have that 5 to 7 year hold period that VCs typically look for. But if you communicate something even longer, or you communicate expectations in advance to VCs and you raise a fund along that dimension, then you can easily work within this ecosystem much better. It's just that that's not how it has historically worked. But if you look at VC as a funding mechanism overall, I mean, it's still pretty nascent, right? Even these large buyout firms and ones that are much, much larger, I mean, none of these things are over 100 years old. And if they are, they may not exist anymore. So to say that the trend is something that we cannot change because there's just been too much time, I don't think that that's a premise that we should be operating on. And I think as you see more people raising more funds with an explicit thesis like we did at J2, you will see a lot more of that flexibility to be able to get what would be a meaningful exit to your limited partners, who as a VC are effectively your boss, and be able to do this well.
Yeah. So I was just going to say the other thing that the U.S. does not do, right, is we do not have our version of sovereign wealth type fund, right? So, when I was at Applied Materials, we effectively invested in 5 or 6 funds And a lot of those funds had money that was trickling, whether it's KVIC, which is the Korean Venture Investment Corp, or it's Singapore, or it's China, frankly, who is effectively, the government is the largest venture capital investor, but it goes from the Chinese government down to hundreds of funds, then into startups. Even the UK has the Future Fund. Almost every country has something to try to alleviate this issue. So I'd say, and I know this is the point of this panel. One is, and if you've read the CHIPS Act, there's some contemplation in there for a $500 million fund into an area where there's very little investments relative to software, for example. So either you change how the venture capitalists think, that's hard because they're there to make money, right? You get the hedge fund guys to come in, or people, to come in, and then they do crossover and they can make exits by deploying a little bit in venture capital, a little bit in public, or the government needs to step in and model after what a lot of the other countries have already done and has worked. So no, 10 million is not very big for a multi-billion-dollar fund, but a 50 million, 100 million, 75 million fund, 4 of those to pay off, and then 1 really big exit to make you the 5 exits you need so you can raise your next fund. That's fine. So that would be my only thought.
So Alex, really quickly, because I know that NSIC right now is tiptoeing into this, and just in the spirit of tactical information, would you spend a minute just talking about the fund?
Yeah, so NSIC is a funding vehicle launched by DIU, which is intended to accelerate deep tech hardware development along 5 dimensions: space, sensors, communications, autonomy, and power and energy. And that is for companies that are pre-venture or a pre-significant venture. They might have received a little bit of seed funding, but are looking for an NSIC level amount of capital, about $250,000 to $3 million, that would take the company from TRL level 3, for example, to TRL level 6, so it can be deployed and then de-risk future VC fundraising because of that injection of capital. Like a SIBR, it's non-dilutive. I think it technically goes under, and don't quote me on this, it's on the NSIC website, but 10 US code 2371, which functions almost like an OTA. So there is the ability to kind of ratchet and have more flexibility than SIBRs traditionally do. That was a program launched by Mike Brown, and is currently headed by a man in an HQE at DIU named Tech Shankin. And I think it's a fantastic program. I think it is in line with what Eileen is talking about. And uncoincidentally, there's a lot of collaboration with In-Q-Tel to make this system successful, in addition to DARPA, NSF, and other kind of non-dilutive funding mechanisms.
Awesome. Thank you. And NSIC stands for what?
National Security Innovation Capital. Although I would say with DoD, I focus less on really understanding the acronym so much as what their proper use is. There are just so many, and sometimes you get acronyms for acronyms. So nobody will hold you to that. But that the focus is similar to what Eileen was talking about. There's actually a book about this, Boulevard of Broken Dreams, about just torn apart sovereign wealth funds that don't succeed. So I would say, I think it is important to have it functioning in government, but even more important, I would take it a step further. I'm not sure it's a bad thing that you get companies where only 10% of their revenue is coming from government, so long as they're delivering the value that the government needs. I would posit that, and to say, I think Skydio is a terrific company, and so long as the warfighter gets what they want, it doesn't really matter that 90% of the value is coming from kids buying it for Christmas.
Got it. So the comment before about DBL and investing in Tesla, and when they first put that money in, Nancy, I'm sure, was thinking this was impact, right? Investing in that kind of, potentially, but it did okay. So I'm just, as you guys were talking about, changing the way that venture capitalists think, and obviously we're not talking all venture capitalists, but is that something that we see on the horizon? We're seeing folks like J2 pop up. I kind of see this whole tier of very national security focused investors getting out there and digging in hard, raising these funds. And actually there's a correlation to your SoftBank comment, Eileen, and there's actually a comment in the chat saying SoftBank is playing for family, country wealth, not individual wealth, although there's some individual wealth in there. But as we're now seeing family offices and high net worth individuals, who have, made their money here in the United States, and we'll get into the foreign direct investment and trusted capital in a second. But just, do you see these mind shifts happening? And folks who are, there's another comment in about AI and some of these capabilities that we are behind on. And, there is a national security. I've started calling it mission investment, not impact investment, but, does that mean something to people? And is that something that we think we can grow?
So I wouldn't say the traditional venture capitalists are moving towards these longer time horizons, because indeed they have, their LPs can't really allow for that. But let's say these ultra high net worth or family offices or individuals, they are able to kind of, I was speaking to one, one of the wealthy, and he started a fund, it's mostly family money, 18 investments, and his view is to hold until they're ready. And it isn't on this cycle, but he has that because it's the family wealth. It isn't, look, I gotta deliver to Ontario teachers pension fund, or else the teachers are not going to have their retirement savings. So it is a difficult thing for the traditional venture capitalists to do, but it is a lot easier for the high net worth to do. It's also, I think this is where corporates play, because the corporates are not about trying to get 5-6 years return. It is a longer term, and making sure their company doesn't get disrupted, right? So that's what, a lot of times, at least when I've invested in places where the traditional venture capitalists haven't been around, we really rely on a lot of the corporations. Now, one of the challenges that's happened is that, let's just take semiconductors, which is my area of expertise. Before, we would rely on a lot of Samsung, call it foreign money, to effectively play where the financial US VCs weren't coming. And CFIUS has made that much harder to get, because there's regulations that everybody has to follow. It's just that, look, now, I'm not so sure this family over here that happens to be in some country that actually there's nothing wrong with them, but they do have they're foreign. That's the only thing that's wrong with them. And now it's very hard to get their money into this company where the US financial VCs won't invest. I mean, that's happening. That's the shift that's been happening the last 2 years. So at Applied, we were always investing with Samsung, Intel, and name 5 other foreign investors.
Yeah.
And so, find yourself a venture capitalist that will actually invest in a component semiconductor company. Not going to find very many of those. So it's a problem. So yeah, we got 2 things. One is not long-term horizon thinking, except for maybe the family investors, and then not having these other sovereign wealth or high net worth families that are foreign being able to easily invest, because trusted capital isn't just about US trusted capital. It's about US and allies and everybody else as well.
Good. So we'll start with that. We'll go there. So CFIUS, Committee on Foreign Investment in the US, has been something that I know has been tricky for companies, but actually we hear a lot of things, and I actually would love for you guys to either support or dispel some of the things I'm saying. So feel free to call bullshit on me. But just as far as there's a lot of kind of numbers floating around, and Trae, as wherever your LPs are coming in from, there's a lot of concern around, companies. I know, Eileen, we've talked about, some of the semiconductor companies, and once they get later stage, that's the money that's coming in. And so untrusted capital, they lovingly call these countries of special concern. But I've also heard that, like you said, it's, any foreign company definitely raises a red flag, which I think makes it even more challenging. So for those out, in the world that may be listening to this panel, who may have some sort of oversight to CFIUS regulations or not, how do you guys think about this? And as you're fundraising, for current and next funds, any of you, Alex, are you looking, purely US, and Trae, we, again, no naming names, but as we've talked, this particular group and I have had a lot of conversations around this concept of trusted capital. And I think that, back to the regulations piece, if we're going to be asking folks within the government to feel comfortable being a little more open kimono about, what are the real problem statements, what are the real needs, that we're finding inside, we also need to be, we need to know their audience of investors has the best interest of the United States of America at heart too, right? So just as far as, kind of feel free to go with that where you will, but, foreign direct investment has become a major, major topic. There was about $20 billion of Chinese capital specifically, is my understanding, from 2014 till the present. So, shutting off that fire hose, but also, I think part of the conversation that we've had too is, what are the actual effects? What sorts of numbers, and I know that trusted capital has been kind of a very black or white, kind of you're in or you're not type of thing, versus actually sitting down and figuring out how do we mitigate information, and how do we make sure that our main capabilities aren't falling into the wrong hands? I asked you like 9 questions, so feel free to jump in on any of those.
There's no way to only take American capital if you're raising a new fund. And so I would include, Five Eye allies, I think, are very helpful in this regard. I mean, there's plenty of money floating around Canada, England, Australia. And I think it's a function. Trusted capital, I think, is a helpful impetus, right? We want to move towards getting trusted capital into the Department of Defense. But I think the real question that we're asking is, what are the information rights, and what is the tech risk that you have by taking outside money? I think in that sense, without a little bit of adjustment, then the program could do more harm than good. If your intent is to just block off all foreign money from the United States, then you block off VCs who are going to try and change the game, which I think we all agreed was something that was important, by being able to raise money from other people who have kind of an interest of putting this in here, which doesn't mean that they're necessarily all American. And I think furthermore, if you peel it back and look at some of these mega funds and you look at where the money is coming from them, you would be, if one of those funds has all American capital, well, then I would be very impressed. So I think at the same time, then all that you're doing is incentivizing the incumbents to continue to perpetuate the model that they already had. And I think the way that we do this is being a little bit more transparent about what trusted capital means. I know that the sources are out there, and I think also looking at what the thresholds are of where you can take outside capital before kind of coming up to these problems. I mean, you could disclose investments in companies that are going to be outside the United States. They're still very good. The United States has several prime contractors that are not from America. And when we talk about, the focus that Eileen can talk about better than I can, in different sensors or quantum technology, a lot of that is coming out from England, Australia, and frankly, just places that aren't American. And I think if you focus on just keeping things American perpetually, I see Steven said Israel, also excellent, right? I mean, look, I can list several countries here. The point is not to be exhaustive. But moreover, I think what you're trying to focus on is bringing the best tech to America. And that doesn't mean that it's always going to originate here, and you really want to be protective of that in the long term. And so I think the more that the program is focusing on that and moving towards that without being, I'm not going to say xenophobic is not the right word, but I think overly protective of just American interests, I think that's a short-term focus. And we need to be thinking about making sure that we're consistently attracting the best technology here, which means we can take money from other people who are also interested in that. IPOs in America are much more profitable than IPOs in other places in the world. It's not hard to get people excited about investing in America. They can be purely financially focused. And I think we need to focus on attracting that level of capital.
Trae, what do you think?
I've always been admittedly very confused about this whole thing. I mean, I get the point around like what Eileen has said about semiconductor components and stuff like that, and the economics of those investments for US-based investors. It's like, I get that. I think the idea that LPs and top tier funds have any sort of leverage over those funds is like literally hilarious. Like there's nothing there. So yeah, I guess I don't have much to add other than this doesn't seem to be the core problem. And same thing with like the critique of the investment community generally. It's like, I'm not sure that it's the investment community's fault that we aren't as innovative as we should be. I think there are like more salient problems that exist in government culture. Not that I'm not open and receptive to hearing a discussion about how the investment community can do better. But yeah, I don't know.
I mean, I think that, look, the English saying, there's, horses for courses, right? So there's going to be the mega funds that they cannot do that. And that's just how they are. But there are, and Alex's funds and a bunch of other funds that can. And I agree that, for the mega funds, not one LP is going to influence because it's so big and they don't have that much of it. But EIF, which was the European, or EIS, which is the European Investment Fund, which had, at least when I was a venture capitalist in Europe, you did pay attention to them because they had 20, 30%. They were your cornerstone. And that's how you got started back in 2001, 2000. So, yeah, can there be more funds that are smaller, that have big, LPs that can influence? Sure. Are the super mega now? Look, then it's going to come up with, but they can only write small check sizes. There are 3, 4, 5. And what happens when I'm done with my SBIR? Someone was saying the valley of death. Now what do we do? Yeah, what do we do? That is when the government probably should come in and help out somehow, like the Future Fund in the UK, like the Singaporeans, like the Belgian. But yeah, I mean, we have to break this down into stages, seed, Series A, growth, and then later stage, and check sizes 1, 2, 5, and 10. In my opinion, what's happening is there is a lot of 1 million check, 500K, 1 million check, and then 50 million check. What happens in the in between? And I think that is where we really are lacking focus. And a part of that is because if you actually historically look, Series B is the worst round to get into. You either make all your money in Series A or you make a high IRR in Series C, D, and E. So what do we do about Series B? And that's where the government fund can come in to assist. Take the returns that the government would get and give it to the venture capitalists. Then maybe they'll do Series B. So those are my views again about how the government can affect this.
And Trae, I hear you saying, but we need the big ones too during some of the big things, like setting up the new defense primes. And like Eileen said, like we need all the different sizes. I guess my biggest challenge is, what does this whole thing look like, right? And how do we kind of figure out, and I guess when we talk about trusted capital, I won't use the word marketplace, but just this concept of a trusted capital ecosystem, because I'm often asked to give, talks to, frankly, accelerators from inside the government to companies about what kind of money can they take or what kind of money should they take. And I shouldn't be giving these talks, first of all. But second of all, they're terrified because, if they get put kind of in a 9-month CFIUS review, that's brutal. And as an investor, watching one of your companies get put in a 9-month CFIUS review is terrible. And so I think, they're struggling because they say, we want to play the rules. We don't want to get ourselves stuck. We want to kind of have some sort of visibility into where folks, where the money is coming from. Because, having raised money myself, you sit there in a meeting, the last thing you're going to do is ask you, Trae, or Alex or Eileen, hey, where does your money come from? That's not, it's a very, we should teach them to do that maybe. But just as far as how do we figure out how to make all these pieces move faster and better? How do we, my concept around trusted capital is to have, an ecosystem of investors wherever that money comes from, but being transparent, not to the public and not to an opaque government website, but figuring out some way to kind of manage that and have a risk index or something. And again, just we've talked about this, at the den, but just what does that process look like so that we make sure that we're setting these companies up for success? Because I've had a couple of situations where we're approached by a company saying we're in line for this contract, but we were just told that we have a 10% ownership or 12% ownership of our company is by a country of special concern, and now we're no longer eligible, and they feel helpless.
So here's my idea, actually. I don't know if you remember back in 2009, there used to be this site where a bunch of entrepreneurs started listing every single venture capitalist they had dealt with amongst themselves. And they started ranking them like, oh, he's really helpful. He's not, she's not, they don't have any women, whatever. They put it all out there.
It's like a college
and I forget the name of the website because this is, a long time ago, and I'm sure it's still out there. So it should be entrepreneur driven, if you ask me.
Okay.
It's the entrepreneurs that are talking to all the venture capitalists. So they should say, let's say you're a defense company, right? And you're a defense startup and you're going, you should say, all right, let's look at a ranking of all the defense. Thank you. The funded. For Beverly. I just couldn't remember it. Yeah. So thanks, Beverly. So yeah, the funded.com, which is ranking people on how good they are and it was giving points, but it was effectively, and it keeps the VCs on their toes, right? That's the good news about that kind of site. Now, what if we did that with, people who are supposed to be trusted capital? And it could be everything from they say they're trusted capital, but they don't actually invest in any defense companies.
Right.
To actually, they're completely legitimate. They have a real interest in patriotism here. And yes, their money comes from Hong Kong family office, but that doesn't really matter. And there's no problem with it. Or it comes from Korea, or it comes from Taiwan, or it comes from any other Asian country that you can think of that everyone's afraid of. So I think that's that would be my view, as opposed to kind of what happens now is that you're asking the VCs themselves to self-declare.
Yeah.
You have to have other people share experience. Like, I had money from this company. Let's take ARM, for instance, ARM, which technically is foreign because it's owned by Japan. We took money from ARM. There was no issue. And they're very helpful. We took money from Samsung. There was no issue. And they're very helpful. We took money from TSMC. Yeah, there's a Taiwanese thing, but TSMC itself, very helpful. Gave us free lots, gave us free R&D. And that's what needs to happen. Not, don't put it on the VCs, put it on the entrepreneurs to do it. So you could call it the defensecommunityfunded.com or something, right? That would be my thought.
I also think there is a magic bullet that solves this problem. Revenue. If you have revenue, you will have investors. If we just gave people revenue, they would be able to raise money from whoever they wanted.
Revenue from the national security community, revenue from the commercial side. I mean,
from anyone.
Doesn't matter.
I mean, if we're talking about defense investing, if the DoD gave revenue to companies they wanted to exist, they would be able to raise money from less dilutive investors that don't have conflicted capital. I am not saying that the investment community has no problems, but I've met with hundreds of companies that are interested in selling to the DoD, and all of them have the same problem: revenue. That is the problem. I don't invest in companies not because we have dirty capital. I don't invest in companies because they don't have revenue.
Okay. And so I mean, a SIBR obviously is, very different. But as we talked about earlier, like those early kind of spray and pray SIBRs early on, you get to the $1.5 million, and then we've all worked very closely with the DoD and the IC. And do we have any advice for getting them past? Eileen, you said kind of the early check and then the $50 million check. So what about that? We have some comments over here about the value of death. What?
The revenue comment is spot on, because that would help there too, right? So yes, I agree. Either there's three sources of capital: bank loan, right? Some venture capitalists, or money from customers. You got to get one of the three. And so if the government's not giving out bank loans anymore, right? So there went that. That is what the Future Fund effectively is doing in the UK, but it's matched to venture capital. The venture capitalists, I said, have a hard time doing Series B unless they completely think differently. So yeah, you're left with get money from customers. Look, I think, if you want to get into policy, instead of the government being the one to purchase, and I know I'm going to start treading on weird lines here, you kind of say to certain companies like, hey, this company you should consider purchasing from, because we will give you an incentive to purchase from this company. Now, I know it's a policy thing, right? But there's a reason. We are at the government, we are willing to sort of fund R&D, but we're not necessarily there to incentivize people to, hey, Apple, you have to purchase this sensor from this company, because if you do, I'm going to give you a tax break because it's an American company. It's right here. You have to purchase this, chip because it's being made in TSMC in Arizona, which is good for the national innovation. So when are we going to get there? But, there's this fear of doing stuff like that, right? Which is, hey, Tesla, if you buy your camera from here, you're going to get a discount. it's working on the demand side of the larger markets than just the defense industry. Because the defense industry, for example, in semiconductors is only 5% or less than the entire industry. So even if they did give them revenue, there's no way in hell it's going to be the same as if Apple gave them revenue. So that would be my only other point about revenue. Isn't just from the government itself. They could have policy that affects revenue that they get from the industrial customer base.
Thanks, Trae. So you said there were policy, and there have been a couple both in the chats and in the Q&A talking about, data rights with SIPRs and talking about changing FAR rules. I mean, you guys are all, inside baseball as far as one key policy that you would blow up, modify, change. What do you think?
I think the greatest risk is that we're looking, and I'm kind of negotiating against myself here, but that we're looking external to government for a lot of government innovation. I feel like the best world is not more defense-focused venture capitalists. Again, I raised the defense-focused VC. This is my livelihood, but I kind of taking away from this. I think the better world is where the government is following where I think the Air Force is trending now, which is that talented people can be recognized within government and incentivized to do so, to build leading edge technology within government. Trae had brought up the example of DDS before. Worth noting, the founding team there spun out and created Rebellion Defense, which is on track to become $1 billion company. Nobody should hold that against the founding team. It made more economic sense for them to leave and come back and sell a similar product to government than it did to stay. And I think that creating that kind of ecosystem is also very beneficial. I mean, being able to fund founders that are spinning out, that have actually seen the problem set and then come back. I think the legal profession does a very good job of this. Somebody will pay you, for example, to go and work, in some kind of low wage congressional issue, if you're at like a Cravath or some kind of law firm, and then you come back and you reap the benefits of that kind of experience, right? We don't have the same kind of transition mechanism in government. And I think as a result, very few people see working in government as a mechanism to create better innovation on the back end. And there are reasons why, right? I mean, you don't want to create an incentive where somebody is in a government slot to be able to make a lot of money on the private sector. I understand that. But I think what we can all agree on is that patriotism alone is not going to get us out of this kind of innovation issue against China or insert near peer adversary here. What they have that we don't have is that they can force people to do the things that they want them to do. We can't do that in America. And so if you don't create the same kind of capitalist incentive where innovation is something rewarded, then you're going to constantly see this kind of drain and this push and pull on the private sector marketplace and being able to work with government.
So I'll answer my own question. There's one that's floating around basically a capital gains type tax incentive for high net worth individuals or family offices, proven kind of U.S. capital to patient capital to get in there. And obviously the longest that it's deployed, the more of a bigger break they get. But is that something that you think is really going to motivate people?
Absolutely. I mean, that's seen to have worked. I mean, you can take the other countries in Europe as kind of the test beds for having.
Works over there, yeah.
So yes, because if you do that, you will enable. I can see in the chat people are saying, okay, you have to find people that are less risk. There's plenty of people that aren't risk averse, maybe, but people don't back them as necessarily as venture capitalists, right? It's hard to get into venture capital. So what happened in France is that when those schemes started, those EIS schemes started, you have a lot of people that get to try venture capital. It's sort of like what's going on with SPACs now. Lots of people are pretending to be venture capitalists or trying to be, venture capital. And great, some of them will be successful and they're going to back companies that can disrupt this. But it's just another tool in the tool chest that we don't use, right? It's an easy one for us to try to attempt to use.
Yeah.
And it's been proven in other countries. So yes, absolutely. There should be some incentive there.
You've mentioned the UK a few times and we've done some work over in Australia, but there seems to be a much easier coordination conversation between the private capital and public capital, markets in some of those other countries than we have here. Why is that?
Oh, yeah. being someone who is the least experienced in government versus the three of you, I'm not going to answer that. I've completely come from the private sector and only into In-Q-Tel 4 years ago. And I find this very confusing when I entered, I didn't understand at all. It took me finally up till now, maybe that I could learn a little bit more. I don't know, church and state, is it the issue? I mean, I used to think that, and then I look and I go, wait, but there's a lot of connections here. So maybe not. The thing I will just say is the Solyndra is the answer. Because when they did that 12 years ago, everyone's like, oh my God, the Washington Post story on us giving a loan to a clean tech company, which completely blew up. We can't possibly ever do that again. No more of that. And that's the problem. So, it's the fear of the Washington Post story. And then you don't get reelected and so that's what I think is the issue. But there's nothing really that should stop the the high net worths getting a tax incentive to go into certain kinds of funds that are for national security. That part I think is just somebody needs to keep working on it, right?
Working on it. Trust me.
Yeah, you are. And then the NVCA as well, hopefully is working with you. I mean, look, if they can get carried interest taxed at long-term capital gains, they can certainly work on this, right?
use market forces, right? Use the things that make sense for people. Alex, what do you think?
I don't think it's a bad thing, by the way, like this push and pull. I know it's frustrating on the government side, but like this is what you get for living in a free and capitalist economy, right? I would hate that there would be a day that the US government would compel somebody to take an uneconomically rational risk on behalf of patriotism alone. There are times when you need to do that, right? During periods of severe war and right, famine, COVID, all of these kind of things. I understand that, but those should be the exceptions that prove the rule. I think it's a good thing that the government needs to figure out things on its side to be able to entice people to fund strategic government projects. And worth noting, when we talk about DoD primes, a lot of these are treated as public utilities at this point. Once you get to, right, the reason DoD primes win an outnumbered amount of contracts is because we need them when we're not fighting wars, right? You want Lockheed Martin to continue creating F-35s even when we're not flying over Iraq, right? That you need them to be able to continue developing those tools even, even outside of like the immediate demand. But at the same time, I think that's why it's so difficult for people to create that kind of long-term scale and be able to disrupt these guys. But most of them came about, if you really look back, the mergers, Lockheed, Raytheon, et cetera, post World War II. And that's once you get to a significant shift in threat, then new primes will come. And that's why I think when you look at the companies that Trae has founded and is scaling, all of which are amazing, Anduril, Trae didn't found SpaceX, but that's still a pretty good one, and Palantir, those were all in response to a dramatically different threat than we had fought in different war. And necessity will create the niceties of the future. And so as the necessity for warfare changes, we will start to see these things. The economic interests will align, but we need to be patient, and you can't compel people on the other side, because I think that without the proper aligned economic incentives.
So we're getting a little bit close to time, a little more time, but kind of my next question is kind of what verticals are exciting for you. But Trae, I'm going to start with you because you take the term vertical to an extreme. But what's your next prime? What is keeping you up at night? What do you see and your mind just explodes? Like, what's exciting?
We generally don't approach the investment world in that way. I think what ends up happening when you focus on specific verticals is you start making relative assessments rather than absolute assessments, where you're like, I have looked at all 10 companies that exist in this space, and this is the best of the 10. And it turns out that that is not a very good investment strategy. You should just be looking for, on an absolute basis, the best companies to concentrate capital into. And so we try to avoid the verticalized approach. I think, it's worth like re-highlighting here that the reason that it's so hard to raise capital in this space is that the government doesn't give companies revenue. I can't emphasize this enough. Like, I'm looking at the chat bar on one side of the screen here while people are talking. And like, this is not an investment problem. Like, it's not that investors are too risk averse, so they're not willing to like back hard science. They are willing to do that if they believe that there's revenue on the other side. As the system exists today, you could literally build a freaking zero energy spaceship that mines, you know, rare minerals from foreign planets and returns them to Earth for negative long-term value. And the government would hire Lockheed Martin to spend $100 trillion to build it themselves instead of giving the contract to you. That's the problem. The problem is that there is no path to success without having a billionaire co-founder that's willing to sue the government into oblivion for bad contracting practices. And so if we have to solve that problem. We have to figure out some way for companies to scale working with the government without having to sue the government. And until that problem is solved, it doesn't matter how much money is raised from the private venture community, because all the money will go to zero. And if it goes to zero, it is a self-licking ice cream cone. Fewer people will come back to the well. And so you can't just infinitely lose money. So I don't know how to address this in any other way. So I think if I had like a policy recommendation, there's been this fund idea that's been getting kicked around for a like bridging the valley of death fund, basically like $100 million a year, where the government is only allowed to give out like 4 or 5 contracts out of that 100 million. So meaningful $20–25 million slugs to companies outside of any vertical focus.
Yeah.
It's just like, what are the 4 or 5 best companies this year? And we need to give them $20–25 million for their tech to use it in production. And we can bridge that for some number of years until we have a program office stood up to support that technology. But that doesn't exist right now. And like, you know, I would have no problem funding a company with hundreds of millions of dollars if I believed that there was a chance, even just a chance, that they would win. But in the last 30 years, since the end of the Cold War, there has not been a chance. We have forgotten how to do this as a nation on the government side.
Yeah.
So I think your original question is, what sectors are we interested in? Okay, so again, I right, you know, I'm very hardware focused, semiconductor focused, and you know, I think just trying to remember what the book that I was reading, the actual statement, but I can't remember right now, which is, but let me just talk about, you know, if you've all read The Kill Chain, right? And I think most of you have. How are we going to win? We're going to win with this concept of IoT, right? And now what is IoT in the end? It's different sensors. It's the ability to put ML, machine learning on the edge, on embedded devices, not up in the cloud where you have to wait. So I have been looking at a lot of investments that can leverage, let's say, commercial off-the-shelf sensors, commercial off-the-shelf processors that are very low power that you can put ML on the edge for, because there's a lot of industrial uses for them. And then there's a lot of, you know, obviously military or IC uses for that type of technology. And in that case, you know, again, in those, you know, the companies are not going to make them ever going to make the majority of their revenue from just the defense sector. It has to be from other industries, other products that incorporate that. So I think those are the places that I've been looking. It's really the edge. I'm very, you know, of course I came from ARM, so I always think about edge and embedded. So that's, and then just to kind of Trae's idea, I totally agree that, you know, there needs to be 20 to 25. I don't know if that's really going to happen, but this 100 million fund, 20 to 25 million, that does need to take place. But in addition, I do think there are just certain areas that if we want to ensure that we remain competitive, whether it's like 5G and semiconductors, we have to make a concerted all of government effort to ensure that we stay on top of it.
Yeah.
And it isn't just the venture capitalists. You know, it cannot just be us, and you cannot just blame us. It's whole of government have to be a policy, and it has to be about thinking 20 years in the future. Just like TSMC came from nowhere in 1990 to effectively running 80 to 90% of the manufacturing of all electronics that go into everything. It came from nowhere in the late 90s. So we have to think like that in some of these areas. And you can't just go, okay, well, venture capitalists, just invest in 5G and ORAN and semiconductors and quantum. It cannot just be us. That's it. Yeah.
Oh, awesome. Alex.
I think policy-wise, it's just incentivizing continued participation, like Trae was saying. I mean, Eileen referenced Kill Chain, and it's an excellent book that goes over this, written by Christian Rose, who is a former, I think, SASC staffer, who now works at Anduril. That's not a coincidence, right? I think there just needs to be more excitement within government to leverage best practices from the private sector to form institutions that look more like the private sector. I think StratFi is a very, AFWorks StratFi, people are familiar with this, is a very good pathway to that. I don't think it's a panacea. I don't think it's going to be the end of it, but it seems to address that $100 million fund that we talked about. I think we need to see this with more branches, and I think we need to see more leveraging of the private sector in order to build these kind of institutions, because the government should not be doing it in a vacuum. And moreover, I think the scarier thing is not just companies not working with government, it's people leaving government because they don't want to work with government. Right. I mean, Trae and I were both involved in the intelligence community. Eileen is still there, right? People prefer to keep an arm's length distance because it's easier to do the right thing outside of the organization. I think we need to solve that. And in the future, you'll start to having VCs come and begging the government to work with their portfolio companies, as opposed to kind of the other way around. And that is what the solution looks like.
Well, to your point about the folks who left and started rebellion, I feel like there's a lot of kind of the go outside to go back inside kind of situation. Like they're coming outside because it's easier to grow a company outside of the Department of Defense in theory. And so it's just an interesting phenomenon that we've been seeing. But there's also this kind of other phenomenon to Trae's point about, you didn't find the company that you wanted to find, so you started it. And I think, having the backing to do that, having the knowledge to do that. And I think a lot of what we're seeing, kind of the point of, the 25 million to get to then transition, is finding those folks, I guess for lack of a better word, like a Sherpa, finding the folks who can really take these companies that are really promising and then get them through this process, because in case there's some internal processes change, I mean, it is really difficult to get these folks even just from a mapping standpoint. So no, this is I really appreciate you guys taking the time. You guys work hard, and I learn from you guys every time I hear. But I mean, just last thing, as far as we're talking kind of like next steps now, obviously some changes inside government need to be made. I'd like to continue that conversation, because we can say these things to them and they, nod, but to really, I think, dig in and start to figure out what actually needs to be changed and how. I think for the first time, Trae, you mentioned the fund. I mean, Congress is on this. I mean, it's, usually you say fund, they think slush fund. This seems to not be happening right now. And I think the support they have is real. And I know that your support, Andrew's support, everyone's support here is really important to that. And I feel like being vocal about that, but then, figuring out how does a rebellion defense, how does an Anduril, how does the U.S. government, does the private investor committee, how do we all work together and figure out how to get revenue? So any last thoughts, any last shockers for us?
I think it's possible to do well in this industry. I would just say it's easy to look at the negatives coming out of this, but I think there's a lot to be excited about. And that's, the risk that we had alluded to, the 3 to 5 years, where if we don't get our act together, things can go really badly. With high risk comes high return. And I would also say, in the next 3 to 5 years, people who are willing to do it, to be a part of that change, you could get outsized returns as a result. And there's a lot of excitement, a lot of opportunity with government who are frankly willing to take risks others aren't. And I would encourage people to continue to do so, and to continue trying to scale with government and bringing the best that they can to sales with government, whatever percentage it is of the total. I just don't want anyone to leave and feel kind of negative about this whole thing. Like I said, I chose not to be a healthcare venture capitalist. I wanted to launch a fund in this space because of the opportunity we saw on literally the ground of a U.S. engagement with another adversary. And I think that there's a lot to be excited about. I think America is a fantastic country. So if you can make a lot of money and keep it that way, then that's a good company.
Yeah, I can agree with that. I think some of it really in the end, I mean, the great technologists, brilliant scientists, I think, you know, and I want to talk about InQtel's new endeavor here in the IQT Emerge. And effectively what we're doing now is we're taking entrepreneurs, many of whom were program managers at DARPA, and really helping them craft their stories to attract outside capital. So my experience sort of when I see a lot of these companies that are defense focused, because they've gotten a lot of the revenue from the government and it's a totally different process, they just haven't crafted their story so that it's palatable to the financial VC community. So I think, you know, kind of an easy thing for anybody watching here that's in that space, really take the time to not just, you know, the first 5 slides, this is my widget, it's got really great swap, and use like 10 different acronym terms that, yes, me as a double E understands, but nobody else will. And think about your business model, think about what is, you know, I like to say this, right? There's one very well-known venture capital fund here, and in the 2000s, they would back the next generation comms technology that was hyper secure and running, you know, 3G or WiMAX, or whatever protocol it was. And you could start your presentation like that. I am the world leading WiMAX chipset with blah, blah, blah. That is boring. So, I mean, almost every defense related startup that I see, they start every slide like this. So that VC, they won't fund a Bluetooth LoRa IoT company, but they'll fund a company that puts those collars on cows and makes sure the cows are, it's called fence, look it up. And those cows are grazing well. They will fund a fishery company that's leveraging IoT technology, but they're not going to fund your widgety thing that you think is the greatest thing because you're an engineer. So you know, all I have to say is, and by the way, you know, and I hate to stereotype, but I will say this has been my experience, is the Israelis, they know how to do this. They come from the defense sector. They know how to wrap it up, and they know how to tell a really good story that isn't like my widget is really, really awesome. And that's if there's one takeaway. So for those of you going, well, they don't like risk. Oh no, we love risk. We don't like the stories that you tell sometimes. That's what we don't like. We don't like, oh, I have a great, I don't know, laser or a SWIR sensor or whatever. That's beyond the point. It just means that you're very product and engineering focused and not market focused. So that's my leaving statement.
Good. Trae, final word. Revenue.
Revenue. One word. Show me the money.
Awesome. Thank you again, guys. I really, really appreciate it. We will not stop the conversation here, but for the moment we will. So thank you guys for having us. Thank you for being here. You guys are the best.
Thanks, Heather.
Well, first of all, before your panel disappears, well done, all 3 of you. That was just great. It was really, I could have been here all day just listening to you. So thank you so much to all 3 of you. And Heather, when is your network talk show begin? You're a rock star. Oh my gosh, you did a great job. Heather Richman, ladies and gentlemen.
I genuinely like it. That's the problem.
I'm sorry?
I said I just genuinely like it. That's the problem.
It's very obvious.
It's great.
To all
It's
4
fantastic.
of you, a giant thank you. Be safe, stay strong, and we'll see you down the road. Thanks so much on behalf of America's Future Series. So long to all of you.